Fed signals, death crosses, and Bitcoin's next move. What to watch? Hey guys, it's Keith Allen. As the title implies, we've got a lot to unpack today. So grab yourself a pen and paper and take some notes on this one because we're going to get through a lot here. Before we climb in, before we get started, just a quick bit of housekeeping. If you like this stuff, please do me a favor, hit the subscribe button, hit the like button, share a comment, and most definitely hit the subscribe on the YouTube feed so that you do not miss any of these lives as I'm back to doing them regularly. So let's talk about what's going on. The elephant in the room. Yesterday, Bitcoin rallied following the revised employment figures from the Bureau of Labor and Statistics. That's BLS for those who aren't familiar. A huge change, right? 818,000 jobs. That's a downward revision. 818,000 fewer jobs than previously reported in the previous year up to, I think it was March of this year. That's a 30% difference. That's a 0.5% change. And just to give you an idea of what the average is over the last 10 years, it's been a 0.1% change. So that's that's a 5 times larger revision than the 10-year average. So, I thought that the market would respond negatively to that, to be honest with you. And I was a bit surprised. Okay, I was a lot surprised when it didn't. And I'm no economist, so I'm going to do my best to unpack reasons why it possibly gave us that pump. The market obviously has been expecting a lot of things to happen here, and this was articles leading up to this. I had read several of them that had projections in the up to a million jobs, a downward revision of up to 1 million. So maybe this was a beat on that. That doesn't sit really that well with me because 818,000 is still a huge number, right? So that's part of it. The other part of it is that maybe this was overshadowed by the fact that the market is expecting, first of all, that actually feeds to the narrative that we'll see rate cuts in September. And then FOMC minutes were released yesterday afternoon, shortly after the BLS report came out. And that also reinforced the idea of a potential rate cut coming in September because the FOMC minutes revealed that at the last meeting, there is growing sentiment for 25 basis points in September. So, we had a rejection of the 50-day moving average, and I should probably show this to you now, right? Since I'm talking about it. We've had several rejections from the 50-day moving average, and this is really where I want to focus the analysis today is on the death crosses, and really particularly the one between the 50-day and 200-day moving average, right? So yesterday we had a rejection here, and it's another one, right? We've had 3 consecutive rejections, not to mention over a week's worth of rejections from the 50-day moving average. Now, we've been talking for a little while about the death crosses that we've been seeing here between the 21-day moving average and all the others. But I think this 50-day to 200 really is the most important and the most noteworthy one. And it has some resemblance of what we have seen in the past. It has some resemblance to what we've seen in 2018, 2019, 2021. So we're going to get into that. But I also want to talk about kind of the short-term price action as well, right? So as I mentioned, a 25 basis point rate cut is baked in for September. Well, tomorrow, it just so happens that Fed Chair Powell is speaking from the Jackson Hole Symposium. And historically, those remarks, especially from that event, have been a catalyst for some volatility. So if he does not like to surprise the market, but he also doesn't like to give us everything. So chances are he's going to telegraph some intentions without committing to anything, right? So what I think the market is hoping for is that he will at least lean into the probability of a rate cut in September, and maybe allude to whether it is indeed going to be 25 basis points, or if 50 basis points is on or off the table. In my opinion, a 50 basis point cut on the table would um, possibly indicate that there's more fear, more concern of a hard landing, more concern of a spike in unemployment and a hard landing, and that would be bad, right? So the market's not going to like that versus a more controlled landing. Either way, I think there's about 75 to 100 basis points baked in through the end of the year, between September and the end of the year, which signals to numerous cuts over the last quarter and into 2025. So now let's talk. Let's talk about these particular death crosses, and I mentioned the 50 and the 200. The red is the 50, the purple is the 200. So I'm going to go ahead and click out the others so we can focus easier just on those and see what that looks like through history. So I mentioned, you know, what's going to happen here as we move forward, right? Nobody knows until we get that clarity from Powell. But let's go back and look at history here on my death cross chart, my recently made death cross chart, and I think that there's a couple that we can look at here dating back to 2018. This one was nasty, 84% correction. This is actually top of the bull market in 2017, and this was an indication that things were, the decline had already started, but this was just a confirmation, right, that the bear market was in full effect, and this was, I think, roughly a year. That was mid-December 2017 down to like exactly a year until the market bottomed, and then we started to see the uptrend, the bull trend, get back into effect here. This, maybe a mid-cycle top, maybe you want to call it the 2019 top, maybe it was a mid-cycle top. However you view it, 54% correction coming off of this, and of course we had this big dip here, which took us down to like 70%, 70 something percent. But this was the COVID crash. So I personally consider this a black swan, kind of an anomaly, an outlier, whatever you want to call it. I don't think I'm not figuring this into my analysis, to be honest with you. I think that we were seeing a recovery here. Had this not happened, had we not had the whole COVID issue, that this trend would have likely continued. Things being what they were, this is how it resolved. But this was a shorter. This looked like a shorter period of time. What was it actually? That was June. The top was June. The death cross was August, and by we had until, I guess, January, and then it's been a while, right? So but not as long as the previous, right? So this actually bottomed around December. So this is roughly the time frame that we're in right now, right? Summertime, and then a bottom in December to a recovery, and historically fourth quarter Bitcoin tends to get bullish. So that's a possibility. This looks kind of similar to what we're seeing right now. Hopefully we don't have another black swan like this. Certainly that black swan could be circling the pond. There's a lot of stuff going on in the world that could do that. Geopolitical unrest, elections, et cetera, et cetera. Now we have this 2021 situation, right? And this also, a lot of technicians consider this to be the actual top of that bull market. And we saw a 55% correction coming off of that, but then a reversion here. And this was largely viewed as a distribution rally. I do remember some manipulation happening here, so I'm going to embrace that as well. Nonetheless, it did give us a new all-time high. So either of these scenarios could come into play here. As we look at what's happening now, we're early on in this descent, but we've had a significant amount of consolidation here, and actually several consolidation levels. And I'm going to take you back to a chart that we've spent a lot of time looking at over the past year. These prior areas of consolidation that have been very important to the price action here. Oop. So stop doing that. Um, obviously we're in this consolidation range right here, 58 60K range, which was correlating exactly with that prior top that we talked about, right? And so the fact that we're still hanging in this zone is a positive, I would say. However, I've been saying all year that these areas right here hadn't been retested. These prior consolidation ranges. This was 25 to 30K range. This was the 40 to 45K range, and we just recently got this test of the 50 to 52K range. Our current lowest low, if you will, on a series of lower highs and lower lows, 49.5. So the question now is, does this hold? Is this indeed the bottom, or will we retest this bottom, potentially get a double bounce from here, a double bottom and bounce from here and work into the next leg up? Or will we retest this and break through? And if we do create a lower low, I would personally be looking at this trend line. That trend line would represent probably about a 40% correction. It's changing a little bit from where it was, right? Because price is moving up over time. This is still almost a 40% correction. That's 37%. If we, I like that 44 to 45K range, to be honest, even if we overshoot the trend a little bit. So that's a 40% correction. If we go beyond this, then I have sights on, honestly, this 25 to 30K range. If we did the 55% that we saw in some of the other death crosses, that gets us to the low to mid 30s. But I don't see enough confluence in that range. Well, maybe a little bit here. No, that's high. That's lower. So I don't really see much in this 55K range, not 55K, 55% correction range to really hang on to. So except possibly this bottom right here. So there's potential for that, but I would, if we made it that far, I would be looking into this 25-30% range. 25 to 30K range, which to me was really where the consolidation happened. Most of the accumulation happened in terms of kicking off this bull run. So that's part of it right there. So we can't say with any certainty that, because we had this in 2018 or 2019 or 2021, that it's going to be exactly like those, because, well, as the phrase goes, perhaps this time is different, right? And one thing that makes that different is, of course, the ETFs. ETF flows have been positive over the last 1, 2, 3, 4, 4 days, 5 days, and counting in this price range. So that shows that there's still some sentiment in that price range. That does not mean just because these guys are traditional, TradFi investors, that they are the smart money. It just means that they have sentiment for Bitcoin at this price. Additionally, if we look into the order book, and this to me is where things get the most interesting, and this is what really makes me wonder where things are going to go from here. As you can see at the moment, we are back to retesting 60K. And I'll be honest with you, I had a bid here and I pulled it at the last minute. I didn't want to catch that knife. And the reason I didn't catch that knife is, I'm going to share something from our friends at Kingfisher and show you what I was looking at. And that is these liquidations, these recent long liquidations, leverage trades that are in jeopardy of getting liquidated here, down to about 59K, just above 59K, really where it's concentrated. And I think those are going to get taken out before we have a chance to move back up. And you can see a lot of the stuff that was here in the 65 and 70K range has actually dissipated, meaning it was either liquidated. The lower ones were. Yesterday we had a liquidation cluster up here around in the 61ish range, and then new shorts open from there. But we had previously a lot around the 65, 66K range, and a lot in the 70K range, and those have apparently closed, right? So now this is this is a target right here to get liquidated. So, man, if you're trading this way, I just encourage you to be careful. Um, be careful with that leverage. Be patient and don't be greedy, because if you are too greedy, you're going to get liquidated. So now back to fire charts. What I was about to show you here on fire charts is that we have uh, quite a bit happening here in terms of liquidity movement and placement, but also the order flow. So, the first thing in terms of the short term price action, I want to remind you that we have significant overhead liquidity here at that 70K range. We've had a hell of a time trying to RS flip 69K, and that remains, that remains true today, but we can't even get past 62K at the moment before we can even talk about going to this. But in terms of when a breakout would happen, the fact that there's so much concentrated here above 60K, and we don't have that concentration here above, say, 55K in terms of volume, that is something that tells me that, hey, the market's not ready just yet. However, with that in mind, one thing that I do like seeing, and we'll look at let's go long term on this, right? The two largest order classes in our bin CVD on fire charts: brown mega whales and purple whales. Sure, brown mega whales make larger orders, but purple whales trade much more frequently and historically have had the greatest influence over Bitcoin price. So while this doesn't look great, this looks kind of bearish, this lower series of lower highs and lower lows. What I do like seeing here is the fact that these larger order classes have been buying. And it's common to buy while price is going down and to sell while price is going up. So even though we're not talking about massive amounts, you can see that these two order classes are net positive in accumulation. Yes, they sell tops and they buy dips, and they sell tops and they buy dips and they sell tops. But they are net positive on what they have done over the last 3 years, and certainly over the last year, as this really kind of started. This run, really, Christmas Eve is when it all kicked off, and they're still buying at this point. So to me, what that says is these whales are accumulating, and they're doing so while price is hovering in this range. Granted, it's a large range, but this also tells me that they have sentiment to go much deeper here, right? And you can see it if I push it a little hotter. Maybe we'll even see more on the longer term chart. But this is now price going down to that 30K range. This tells me that they have sentiment to buy lower. There's most of the sentiment is stacked here at that 50K range. However, they're happy to buy all the way down. Now, why would they be willing to buy down to 38K if they don't think that a breakout is coming soon? Because these are long-term investors. That's the simple answer. Long-term game is buy incrementally at areas that you have confidence in, areas you have conviction for, and hold until price reaches your upside targets, which obviously are going to be higher than this when all is said and done. But you can also see there is a lot of sentiment to sell at this level. So even if they did, even if we make it up here or go down here and make it up here, we could, it's likely that we'll see some selling up at this level before we get a breakdown or a breakout rather. Another thing that is positive is over time, we have seen the concentration of ask liquidity, although it's come down lower a little bit, it is eroding a bit. And it's eroding because some of it has moved up, some of it has moved down, and a lot of it has moved into the active trading range. So as we continue to work on these levels and just kind of erode this, and worth noting that there's been Mt. Gox distributions going on for probably over a month at this point, right? It was on Kraken, and then it went to, I think it went to Bitstamp, and now it's on a third exchange. So those distributions have been happening all along, kind of holding, absorbing some of this buy pressure, absorbing some of this buy volume, and keeping price from shooting back up into this. Will we get there eventually? I do think that we will. But what we have to watch for is when will price flip this 50-day moving average. And I'm going to show you this historically. We have to flip this 50-day moving average and then test the 200. And historically, that has not been an easy move, right? Let's go back to those previous events that I looked at, right? Came back, flipped the 50-day, actually ground through the 200, fell back down, and rallied again to get through. Let's go back further. This one really spent a lot of time working on this 50-day. There was indeed a fake out here, and then things broke down again. Spent some time consolidating. This was accumulation, and then there's the breakout. But COVID screwed that up for all of us. Go back one more. 50-day moving average. Here's the death cross and resistance. This was prolonged. This was like, we fell below it, came back up, but tested that 200 and failed. Came back, fake out, and failed. Spent a lot of time consolidating under that 50-day moving average. Things broke down. This was full bear market mode until things bottomed out. Came back in, worked hard again to get above that 50-day, and then in one big candle shot through. That was a like 18% candle, by the way, that shot through and kicked things back off for the 2019 bull run. So in a nutshell, lots of different things to look at and consider. Of course, tomorrow, Fed Chair Powell going to speak, and hopefully he's going to telegraph something positive for the market. Hopefully he will let us know if, it just flipped to another chart, and this is a good one while I'm at it. Fed funds rate relative to unemployment and the market, right? So we know that when unemployment spikes is when the Fed tends to cut rates. We do have an uptick in unemployment rate. Yesterday, we saw a nasty downward revision in employment numbers. So we could see this number tick up. And we likely will. What the market really doesn't want to see is a big spike like we had around COVID, right? So that's what the Fed is trying to navigate. We expect to see this Fed funds rate start to tick its way down. We'll get into a whole nother analysis to talk about how the market may respond to that when that time comes. But for right now, my focus is on the liquidity in the order book. It is on the liquidations that seem to be good targets. And it is on that 50-day moving average to see whether or not price can flip that 50-day moving average and then go test that 200 before we have a chance to go back up here and look at all this. If that happens, if we get up in this range, if we can cross that 200-day moving average, then it's game back on. If we lose this trend line or lose, say, that mid 40s range, I hate to say it, but I think it would be over, and we have probably a prolonged period of time until we bottom out and reclaim the glory and go after a new all-time high. Going to wrap it right there, guys. Hope you have a fantastic day, and as always, trade safe, my friends.